Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Yesterday, Uncle talked about how we had the breakdown of the descending triangle pattern. Based on that context right there, Uncle was pretty bearish, all right? We also broke down the 23.6 fib level at 47.68 and we closed at 406, all right? And I mentioned based on previous price action, right? We had a lot of buying pressure from that 406 level where the orange arrow was pointing at. Okay, we had a lot of buying pressure from 406. So that was my support level, and I needed to see it break down. Okay, I wrote here on my Discord the bear case scenario. Bears must defend 407.5 to 408 zone as resistant with 410 as the highest. To continue the bears momentum, 406 needs to fail as support. All right. That's our next trigger to enter shorts. This would put 404 in play first with lower price targets. Okay. So far today, though, SPY managed to hit the 404 level before it started bouncing and basing at the end of the day. Okay. Now the volatility for 2023's price action, guys, is not as impressive as 2022's and 2021's and so on's price action. But for me, I'm a level-to-level trader. So this is pretty, I like the action we're getting. It's much better than the action we got in early April, I tell you that. So, based on this setup, we lost that critical 406 level. It wasn't as big of a breakdown as yesterday's breakdown of the 410 level. But overall, price action is still bearish and bulls are going to need to show more follow through here by defending 406 as resistant tomorrow, breaking down that 404 level. I got 38.2 fib level at 42.5, and there's a gap around 401.2ish, and with the next critical fib level at 398.2ish, and there's also a gap at 396.2ish. Okay, so plenty of reasons for SPY to head down lower and plenty of support levels to be watching out for, target levels, okay? But for tomorrow, if you're a bear, you want to see 406 defend as resistant, all right? Since all April, especially early April and a little bit today, that 406 level served as support, okay? So tomorrow, there's a chance we'll get to see 406 get tested as a resistant, okay? That's going to tell us, that's going to be a good pivotal moment to pay attention to if it tests. And like I said, bears need to show follow through by giving us selling pressure, give us the reversal of the levels roll, okay, from support to resistant, break down 404, break down 42.5. That'll trigger, those will be the triggers. Breakdown on support will be the trigger to go short, all right? But although we lost a critical support level today, question is, can bulls recapture? All right, so that's the bull case scenario. Recapture 406 and definitely clear that 407.68 level. I will look to long if those levels recapture or clear. All right, and that would put a back test, a healthy back test, as resistant of the big breakdown level at the descending triangle. Okay, when we see breakout or breakdowns, it's good to see the breakdown level get retested to confirm that level's roll change. In this case, from support, see if it changed to resistant, okay? But for a back test of 410 to be in play, like I said, it needs to recapture 406 and 407.68. If you see that happen, look to long, all right? Otherwise, we stay below 406, look to short or buy puts when 404 and 402.5 fail as support. Okay, we play it level to level style. Triple Q here. I'm looking at the 1 hour chart. I had this downward channel that I mentioned you guys all week. All right, we recaptured it in yesterday in the what is this, 1600 hours? What's 1600 hours? Is that 4 o'clock? 4 o'clock Eastern? Well, anyways, it recaptured it after market or end of day yesterday. Today it treated that channel as a support, not once but twice, okay? And end of day, look what happened. It managed to find a way to recapture. This is in the aftermarket, but it's still trying to recapture that 313.2-ish level, Okay, so based on this context, if you're bullish on triple Q, you want to see it stay above 313.2. Based on this downward channel, the breakout level's at 315.3. Look to long above 315.3, all right? Breakdown of the channel now is at 311. Look to short on the breakdown of 311, targeting 308 to 307 zone. There's a gap down there, all right? IWM, we talked about how it was bearish below 174.5. Watch for the breakdown of 172.5. We got it. We got it, and we're coming very close to that 78.6 fib level at 170.3-ish. Okay? So that's the bear case. As long as it stays below 172.5, that breakout holds. Watch for the test of 170.3. If it breaks down, 168.5 and 167 are in play. If you are a bull, look to long above 173. 173 in the recapture, putting 174.5 and 176.5 to 177 zone in play. Above 177 would be bullish in my opinion for IWM, okay? But as of right now, it's still looking bearish. We just need to see 170.3 fail as support to give us more downside. Tesla looking great here. We talked about how it needed to base, how it needed to chop a little bit to build strength for more downside. Watch that 159.73 level. And look at that, intraday it broke down and ended the day, closed at 153.74. It even closed below my 155 level, all right? So as you guys can see, there's a big gap here for Tesla. As long as below 155, I'm favoring the gap fill, which is at 144 to 146 zone, all right? There is support. There is support at 150, all right? So as long as below 155, there's support at 150 with 144 to 146 zone below that for the gap fill, okay? So stay bearish below 155. If 155 recapture, that would put 159.7 back in play, okay? Could try to go for a back test and give us the level change. But if 159.7 clears, look to long. All right, look to long at 174 and 176 back in play, all right? Here is Apple. All right, Apple gave us a week. It closed right around or right at that purple trend line. But what I'm looking at is how we closed below the yearly orange trend line that I have here on Tuesday. And today we rejected it. We tested it as a resistant, rejected it, okay? So to show follow through, Apple needs to stay below 163.5. Go break down 162 to trigger more downside. Short if 162 fail. With 160, gap fill at 158 and 156.6 in play, all right? Now, if it can recapture 165, look to long with 166.5, 168, and 170 in play, okay? Those are the trade ideas. DXY is just chopping here, all right? Just chopping. If we can stay below 101.5, 100.8 stays in play with 99.8 below that, all right? As of right now, there's resistance at 102. Clear 102 to trigger 102.6 and 103.4. Move up there, all right? And here is the VIX. VIX looking interesting. It still managed to close for the second day in a row above 18.5. Still can't clear that 20 level, guys. Remember, we have resistance around 20, all right? And it got close to testing it, but it's still getting selling pressure from there, okay? So to be bullish, I need to see it above 20 at this point, okay? It can't just stay above 18.5 and not show follow through forever, right? So clear 20, then VIX could be bullish, okay? Now, if 18.5 fail, look to short with 17 and 15.8-ish back in play, okay? Now, let's take a look at the dark pool. Here's dark pool, 1.1 billion premium around that fall 6 level, okay? So you guys, it was one of my support levels, and I didn't even look at the dark pool, but it was definitely a lot of activity at the fall 6 level. So keep that as a critical pivot level. Add it to your chart, label it dark pool level, all right? Below fall 6, stay bearish. Above fall 6, it could be bullish, all right? And here is, we're going to go to the SPY, filter for 500K premiums or above, all right? All right. 96% in the puts, all right? Mostly block orders. Sweep orders are the most aggressive plays. That's where it's more urgent, if you will. When the person that's putting these orders, they're feeling more aggressive, they go for sweep orders. Block orders are not as aggressive. Split orders I don't really pay attention to, But block orders, there's usually more time on them and they're not as aggressive. Sweep orders are the most aggressive. But yeah, 96% in the puts for a SPY, mostly block orders. Triple Q, 78%. These block orders are mostly puts, and they're very in the money puts. Same with SPY. Okay, getting a lot of block orders in the money puts coming in for SPY as well as Triple Q. Could be a sign of big volatility on the way. Look at that, over 300,000 in puts, guys. A lot of block orders, a lot of money is moving into these contracts, and they're in the money puts. All right, in the money puts. Could be hedges. Could be hedges. We'll see. We'll see how it turns out. Usually, like I said before, when I see these type of orders coming in, same thing with Tesla here. When I see these type of orders, there's usually big volatility ahead. I'm talking $10, $20 moves, and I'm hoping I'm right because, you know, like I said earlier, compared to 2022, the volatility 2023 hasn't been that impressive. We usually get $10, $20 moves for SPY, bro, last year. This year, not as impressive. $2, $3 move, $4 move is pretty good this year. And here is Apple. So I think it's probably the same thing. Oh, nope, 100% in the puts. Block order, 155 strike for puts. Okay, they enter around 163.5-ish. Okay, so it's bearish. And here is the VIX. All right, 100% in the calls. Split orders, but 100% in the calls for the VIX, all right? So thank you guys so much for watching. I hope Uncle Charles was able to assist you guys. And if I did, that would mean the world to me. If you guys want to support Uncle further, even more, or more content from me, definitely consider joining my Discord. Other than that, have a great evening. Peace.